I've always introduced Rakesh Jhunjunwala as the big bull, but today I want to introduce him differently. He's one of the nicest human being I've met and someone who really lives life very simply. His word is his bond, and apart from being a savvy investor, he's also a great human being. Mr. Jhunjunwala, we're interacting after a gap of nearly 8 months now, so I was really looking forward for this interaction. Thank you for your time and thank you for joining us.
Anyway, Nikunj, thank you for your nice words. I hope I lived up to them.
We started the year with a bang. Then came this sizable correction when Dow fell 1,000 points. Everyone thought that, look, it is financial Armageddon, run to the hills, take cover. But the pace with which markets have made a comeback, are you surprised what's going on? First a rise, then a fall, then a comeback.
Well, markets always surprise, but they say it's fastest, before the climax. So I think the rise in January has produced some, not a permanent climax, not end of the bull market, but surely has produced some kind of climax to the whole rise from 7,800. We had a tremendous rise from 7,800 in the budget of 2016 to 11,300. So I think January was some kind of climax. Not a permanent one, not one which will not be broken, but certainly one which will halt and take time.
So are you making a case that now markets could consolidate time-wise and we could see minor price-wise correction, and it could be for not days but quarters?
You're taking the words out of my mouth. I think markets will consolidate and need to consolidate to have a healthy further rise. Right? And I don't see much of a fall, neither do I see much of a rise. I think markets will move in a narrow range. Right? And see, we cannot forget one thing, that we have fairly high valuations in a time when markets are going to face uncertainty. And I think the primary uncertainty is the talk about the elections of 2018 and 19. And nobody knows what's going to happen ultimately. You may have the BJP coming back on its own with 300 seats. You may at the moment think BJP may get only 225 seats. It's all speculation. But what markets don't like is uncertainty. So all this kind of speculative talk has surely produced some uncertainty. Then we had this public sector scam, which has also brought some amount of nervousness. Internationally also we face uncertainty from the interest rates and inflation. And the reversal, maybe American central bank policy about QE is reversed. We don't know about Europe and Japan, but surely people are speculating that will also reverse. So I think in the face of this uncertainty and the kind of valuations that we have, for market to easily and break the previous high in a very short term without time passing is, in my opinion, difficult.
You've always maintained that bull markets, they peak out when there is a valuation froth and where there's a participation froth. Valuations are not very expensive, they are expensive, and participation is not at a historic high.
Yeah, so technically markets not ready to go down. Despite markets don't go down because valuations are high. Markets will go down when there is extreme valuation, there is extreme participation, and there is bad news. Right? We don't have any bad news at the moment. The economy is an uptick. Right? And see, valuations may look expensive today, but I think if we have the kind of earnings growth which the brokers are predicting, then they may not be so expensive. Only time will say. Also, I feel that, the flow of equity by the Indians will moderate but will not stop. I think the Indian money, suppose it had reached about 20,000, 25,000 crores a month, it may come down to 12 to 15,000 crores a month, but it's not going to go below that. So we are going to have a flow of local money. So therefore I feel, and what's wrong? I had one of the largest gains in my portfolio in my life last year. Right? And on a sizable portfolio, sizable gain, it needs to be absorbed, it needs to be digested. So as equity investors, we should not feel disturbed about a possible consolidation of a quarter or 2 or 3.
Markets have moved up and earnings have not kicked in. and everybody is waiting, some are anticipating, but nobody is getting it right. Why, to your mind, earnings are not kicking in?
But I think the last quarter earnings were good, and whatever feedback I have, the economy is performing very well in this quarter. If you meet companies, they're optimistic. So I am quite confident that earnings will come back, and earnings growth will come back.
I'd like to draw your attention to what's happening in the world right now. US bond yields are moving higher. We have a fear of growth. 2 years ago, we were discussing negative interest rates in the world. Now, world is getting worried about inflation. So, how do you see the global dynamics are changing?
Well, see, it's a very big dilemmatic situation, Nikunj. That one fact is that the US bull market started in 1982-83. That is when US interest rates peaked at 17-18%, right? When Paul Volcker was the chairman of the Federal Reserve, and he raised interest rates to kill inflation, and he managed to kill inflation. And those interest rates of 17-18% came down to nearly nil. And now they have reversed, right? Now, I will say the interest rates are very important, but they are not the only factor in a bull market. But to my mind, another factor which has supported this long bull market of 35, 37 years is globalization, right? Because that brought deflation. China exported deflation to a lot of countries, especially America, and globalization helped economic growth all over the world. I think what Trump is doing is actually starting the reversal of globalization. Thirdly, I think technology played a big role because it produced efficiency. I think that's still very much around. So I don't know what to say about how markets will, fare in the next 5-6 years internationally. I'm no expert. But I think we should keep at the back of our mind that we had a 35-40-year bull market from 35-year bull market from 1982. It started with the bottoming out of interest rates, right? And the peaking of that bottoming out is now over, right? Also, profits as a percentage of GDP are in the US are at the highest ever. But I don't think technically, if you tell me 3 months, 6 months, 9 months, 1 year, I feel seeing the screen and the attitude that the international markets, especially America, will go up rather than down.
So you're making a case that, look, we've seen a P expansion because of liquidity, and that P expansion is unlikely to continue. If earnings don't kick in, then we have a problem.
Yeah, because that's what I would normally expect. I can tell you one thing surely. I know about some of the large caps. The mid cap Ps are not going to last. People forget that Polar is a genuine company. I think its public issue came for 200. It opened at 400. It went to 2,800. And the price came down to 70 rupees. It's a genuine company. There's not some fraud. So I think some of the public issues and some of the new issues and some of the mid caps are crazy valuations. People have forgotten what it means to value a company at 35 times earnings.
But can I safely say, from an Indian market standpoint, a lot of money is coming via the SIP route. This is like a long-term commitment which Indians have taken. This is not Satte Ka Paisa which is coming via the FNO route.
No, there is no question. I'm saying the flows of money to Indian equity can diminish to some extent, cannot stop. And I'm quite sure that if I see an angle of 5 to 10 years, I think regardless what happens in the international market, the Indian markets are going to perform well. Maybe if the international markets go down, maybe India will go down for a year. But if I see a 5 or 10 year horizon, I'm as bullish as ever.
Let's talk about the taxation structure which has changed. Now that there's a 10% tax, could that have an impact on P multiples, because P multiples are a function of return?
It's difficult to comment. We have to pay what the government desires. And for me, I think a 10% rate of tax is reasonable. It's not something out of the world. And I don't think that flow of money to equity will stop because of that. But I thought that sentiment was good. And I don't think government is going to realize even 5,000 crores or 3,000 crores of capital gains tax, because I will have to first gain from the price as on January 31st. Then I will have to sell and then I will pay tax. So I thought, I'm not against the imposition of this tax, but I thought it could have been delayed by a year or two.
2 years ago when we met, you said you think that it was foolish to write off Indian IT companies. Now, Indian IT sector are at least indicating for a brighter future. Do you think worst is behind IT sector? Are things opening up there?
See, I'm not so knowledgeable to say whether worst is behind for all time, but I think next year the performances will be much better. And what will also contribute is currency. Because last year they all had 2017-18 revenue in dollar term, in rupee terms is lower than dollar revenue, right? By about 2.5-3%. Next year I believe that rupee revenue will be 2.5-3% higher than dollar revenue. And I think that will give a 4 to 5% effect in profitability of IT companies. Plus, I think growth next year is going to be better than 17-18. So I think they will perform well next year.
So the recent rise in IT, to your mind, is justified?
Well, I don't have any investments or any trades in IT companies, but I think they've done well. They will perform well, in my opinion. I don't know, I could be wrong.
Now, Indian pharma companies have had two challenges. One, FDA problems. That's more like a manufacturing problem. Second is pricing. On both the aspects, what is your read?
Well, I think the FDA problems will be largely behind us after the present problems are solved. But I think it was partly a problem of attitude more than anything else. And Indians are fast learners, so they will be far more respectful to the requirements than what they were, and they are better experienced to handle it also. So I think as far as the FDA problems are concerned, it will be history, provided, let's say, Sun Helol is solved, Lupin's problems in Indore and Goa are solved, Dr. Reddy's problems in Srikakulam is solved. I don't think it's going to recur. As far as, see, there was consolidation in the buying industry, right? I think there will take place slowly consolidation, and I think pricing power will come back to some extent to these people. And remember one thing, we are all obsessed with America. There is also a very big non-American business, which is growing well. So given a time horizon, I think pharma companies should do well.
The entry of Amazon, which means one more player enters into the market, can that stabilize the pricing?
I think that's a myth.
Okay.
What is going to happen if Amazon is still very far, far away from, and where has he got the customer? And anything concerned with medicine and doctors in America is
always very complicated.
In fact, Amazon's entry may help the pharma industry, because there will be at least one more buyer for the generics.
So the pharma investments which you have, they are in public domain. As of now, you are a patient investor and you don't think you're in a hurry to sell them.
Why do you want to know what I am doing?
No, just as a business, the way it's
Why
developing.
should you know what I am doing here? Fine.
Okay.
I have an opinion, I expressed it. Yeah, what I do is my business.
You've always said that the banking business is a business of trust and you don't trust PSU banks. And now we can see vindication and how things are falling apart. What's happening to PSU banks, that's shameful. Do you think government should not stop recapitalizing them?
I think first we got to consolidate these banks into 3-4. You go to Pedaro, there are 14 banks of, of the same owner. What sense does it make?
So you think big changes in the banking sector are coming?
Have to come. How long will government? You have a bailout in 92, you have a bailout in 2003, then you have a bailout in 2016, then you have a bailout in 2017. How long will bailouts continue?
Now, according to some public documents, I understand that you are keen on some NCLT cases. How do you think the NCLT process is moving?
See, the NCLT itself is good, but I'm not happy with the process. Because they must make a law that when a bid is made, all the bids, today the IRP and the COC has got all powers. You may see the bid, you may see one bid today, you may see a next bid tomorrow. I think it has to be open in presence of everybody. So, NCLT is a very wonderful thing, it's welcome, but I think the process needs refinement, and the refinement will come with time. So therefore, I am very happy with NCLT.
But when NCLT, proceeds will start kicking in for the banking sector, whether it is steel or whether it is cement or some other sectors, could that be the game-changing moment for banking sector per se?
No, there is no game-changing moment. Unless we have efficiencies in public sector banks, it's only a moment of glory for another 1 or 2, 3 years. And 11 banks are under PCA. It's not a small, I think there will be a relief, but we have to do something for these banks where we find a permanent solution.
So how does one invest in the financial sector? Private banks are expensive, NBFCs are overowned and very expensive, PSU banks you don't want to invest. So, I mean, the financial sector is important because that's nearly 30-35% of the Nifty now.
Well, I don't know. Everyone has to make his own choice.
But you think financials or interest rate sensitives, they run the risk of underperforming, and currency sensitives will outperform?
I think currency sensitives will perform well. I don't know about interest rate sensitives. I don't anticipate an increase in interest rates in India. Neither decrease.
I'd like to draw your attention to what's happening to P multiples of a HUL, Procter and Gamble, even Titan for that matter. These are P multiples which are running north of 50, 60, 70 times. What should one expect in terms of returns now? These are good businesses.
Well, what one has expected is some returns have come in advance. That is what you should expect.
So what you're trying to indicate to our viewers, and I don't want to get this one wrong, sir, is that you're not bearish, but you feel that equity markets are pricing in next maybe 2 or 3 quarters of earnings well in advance?
Maybe.
But
I think most likely.
But you're reasonably confident that the demand will come back.
For what?
For earnings and for the economy.
Earnings, companies are, liver has done very well last quarter. So I think demand, it's not a question of me being confident, that is what the feedback I get on the ground when you talk to companies.
What is your view on retail? I mean, given that there's
Retail is a big business and it's an extremely difficult business, and there are very few profitable retailers in India.
But
and very few retailers who have true cash flows. Forget profits.
But can a brick and mortar model, which is getting disrupted globally, really exist in India?
Of course, why not? And because the penetration of all of these organized retail, especially in grocery, is not 10% of India here. It's not 15% of India. Why will it not grow? And remember one thing, that grocery is a very, very difficult item to deliver. Because I cannot, for 1,000 rupees of material, I have 100 rupees of delivery cost. My gross margins are 15 rupees or 15%. So it's not easy for the groceries to come on the net. And don't compare big basket and all. You're losing 400 crores a year. You're subsidizing the customer. How long will you subsidize?
You always said that when you invest, you look at one very basic factor, size of opportunity. And last time you told me that the size of opportunity in aviation is great.
Yeah.
The economy was opening up, air travel was aspirational, competition was getting limited. It's so great to see that aviation now has become a go-to space for everyone.
I don't think aviation is a favorite with any investors, right? And but it's growing at 20%. There are entry barriers now, simply because there are no slots. There are very, very few. I think there are really only 2 profitable airlines in India, Indigo and SpiceJet, and Jet is marginally profitable. We don't know about Go Air; it's not listed. So it's a good business and it's going to grow.
Global liquidity will get tighter. Let's be very clear. Whether it gets tighter this year or next year, we don't know. But global liquidity is going to get tighter. Could that have an impact on ultimately emerging market flows?
Surely it should have.
So you think that liquidity could remain tighter, and we could be in this ping pong kind of a mode where we go here, we go there, we may be jumping in the same place?
Well, I don't know about a year or two, but at least for 2-3 quarters, I think market will be in a range.
So in terms of a big picture construct, because you look at the big picture, I mean, I've known, and I would like to share this with our viewers, that when you invest with your instinct. You've invested in Matrix in 2 hours. You don't look and analyze reports. That's Rakesh Jhunjunwala for you. Where do you think the big picture is looking great in terms of and size of opportunity?
Size of opportunity in India, everything is size of opportunity. Toothpaste, soaps, restaurants, hotels. In India, because we are at such a low level of GDP and growth, so opportunity is there in everything. But you got to match that opportunity with a company which has got competitive ability and at a good valuation, which in today's times is not easy to find.
People can copy your style, Mr. Jhunjunwala, but I think what they lack is the conviction you have. And I can say this with some degree of confidence, because over the years I've interacted with you. What I've admired about you is not your style, but your approach and conviction. Is that the differentiating factor for you?
I don't know, because I don't know anybody who tries to follow me or tries to do what I do. Because to answer a question, I have to examine somebody who's trying to do what I do, and then how does he do it. So I don't know, I do it the way I do it.
But that's a conviction. I mean, it's a conviction which is the differentiating factor for you.
Yeah, but that conviction sometimes results in losses also. All the profits are known, the losses are not known.
Of course, we've spoken about it. I read the Buffett newsletter which came out over the weekend, and Buffett says that there are 3 L's you should enjoy: leverage, liquor and ladies. So Buffett says that to be a great investor, you should avoid these 3 things.
It's easy. जो आदमी ने Mr. Buffet has never taken leverage. So what does he know about? He might have met a lady, he might have had a drink, but he's never had taken leverage. So what does he know about leverage? Yeah. If I started with 5,000 rupees, if I had not taken leverage, I would not be where I am today. So that's his great man's opinion. So be it.
Just some closing comments, Mr. Jhunjunwala. If Rakesh Jhunjunwala of 2018 meets Rakesh Jhunjunwala of 1980s when you started your career, what advice would you give?
See, I've learned one thing in life now. That life is about learnings, not about regrets. So I'm not doing a regret. I think the one message I would give is there is much more to life than work. That's one message I learned.
And
which I can never implement.
So let me be this time machine player, okay? I've taken your clock back and not let me take the clock forward. March 2018 or February 2018, if you were to write a letter to Nishta or to RMN and Arivir as to where Indian economy and markets would be in 2030, what would you write in that letter?
What would I write? What would they know in 2030? So I cannot write to them about Indian markets. I can write to them about diet, about education, about sports, about movies, about the internet, but not about markets. Yeah. But India, I can tell you one thing: it will be higher and far higher. How much I don't know.
No, but you'll always have this parental advice, but you'll always have this investor advice because that's your DNA. So somewhere in the letter,
I don't want my children to do what I'm doing. No? I don't want to influence them to try and do what I'm doing. I want them to be their own personalities. So why should I talk to them about markets here? I'll talk to them about general things in life. I don't want them to be what I am. They may not enjoy that.
In 2017, when we met, you said 2016 was not a great year for you. And in your own words, you said, look, I've underperformed. 2017 has been a great year for you.
For my portfolio, it's been a great year.
How will 2018 be different for you from 2017?
Well, I think it has. I'm happy if my gains are digested. I'm not expecting some big splurge of return.
Your portfolio is in public domain, but in terms of return,
it's not.
The one which is in the public domain. I'm talking about public information here. Whatever is in the public information, your large investments are very well known, and that's what I always admire about you. Do you think for that kind of a portfolio to get 14-15% tax, pre-tax returns would be difficult in the next 4 or 5 years?
I mean, I hope to do better than that. But it could be that maybe next 2 years I get 30%, then I don't get return for 2 years. Or maybe next 2 years I get 10%, then I get 30%. But I hope to do better than 15% pre-tax. Yeah. Hope. I don't know whether I'll do it or not.
Certainly, sir. I wish you all the luck for that. I was being asked this question when markets fell on my Twitter handle and again on various forums. SIP band kar dein kya?
Why?
So how would you reassure investors?
Well, why should you close it?
That one should not. So the question or the answer what I want from you, sir, is that should average investor run away from the correction or not run away from the correction?
I think the average investor should invest every month in India, regardless of boom or correction. So because don't forget one thing, that basically the Indian economy is on a bull run, right? And there is vast underexposure money has to come. So if just like I planned for insurance that I want my education for my daughter, so I buy a policy, you should put some part of it in equity. I think it will be much better than putting all the insurance in, right? So I don't think people should be afraid of a correction or get excited in a boom. Put your money every month regardless of whatever the valuation is.
It may be boring, but it is effective.
It is effective. I am educating from 15 years. Yeah.
When I talk to some of our common friends, they say, Bhaiya is a great person, but Bhaiya ko kabhi-kabhi gussa bahut aata hai.
I mellowed down a lot. Yeah. I mellowed down. You said what's changed? No?
Yeah.
I mellowed down a lot.
Why is that?
I don't know. I think because to be patient, the 3 sources of happiness are patience, contentment, and tolerance. So I think being patient, I want to trying to learn all three of them, or do better at all 3 of them, and maybe that's why become more patient.
So we wish you all the luck. Thank you for joining us, and it's been a very insightful interview, and thank you for sharing your thoughts.
Thank you.